of course, off the back of that story, you know why we were talking about the region and the fact that for many banks, units across East Africa and beyond continue to contribute a larger and larger share of revenue and indeed profit. Now, KTN's Noah Kipkemboi had a chat with Stanbic's Chief Finance and Value Officer, Dennis Musau, and he started by asking him how Stanbic had managed to keep their non-performing loans below 10% at a time that the banking industry is grappling with an average of 14.8% in non-performing loans.
So the NPL ratio is an outcome. You've got to think about it from how you select your customers, how you originate your credit, and how you think about the vetting that you go through to originate your credit. And then there's the credit management and monitoring through the cycle. I mean, if you lend to a customer today for 20 years, you're using a little bit of history of their performance and their current circumstances, but in 20 years, a lot could happen. So how do you monitor that? And then when things go wrong, because some things will go wrong in the process, how do you go ahead to manage that? Now, our NPL ratio is a function of many things, starting from last year to this year. In there is new NPLs that have come through, so new customers that have not performed, and that's indicative of the environment in which we operate in. I mean, the customers we are banking are mostly in Kenya. They are facing inflation, they are facing currency pressures, they are facing higher interest rates. So we've seen new NPLs come in. We've also seen currency pressure in the form of, as the currency depreciated, 54% of our NPL book is actually foreign currency. So as the currency depreciated, you've seen that number kind of inflated. And then we take a view on customers and say, do we think we're going to recover from this customer? And where we think we want to recover, we write off. So there's also that angle of either full write-off, especially for unsecured facilities, and then there's partial write-off for some of the secured, just to true up the books to ensure that our asset balance sheet is reflective of real assets that we think have economic value out there.
And this brings in the discussion about the whole issue about risk-based pricing, because it's supposed to be one of those buffers that will help with this particular issue when it comes to lending. How has that applied and impacted on this particular performance application of, that particular aspect?
So the risk-based pricing has three broad theories to it. The first broad theory and principle is that the customer needs to know what are the components, and it's almost for the customer to determine what is the price that they are going to pay for credit. The second broad principle is that the risk-based price is supposed to be fair. There is fairness in how you price Noah vis-a-vis Dennis based on their historical performance and their predictive or predicted performance of the credit you're extending to them. And then the risk-based price is supposed to transmit the perceived risk into the price. So there's got to be an element of what do I see in the risk profile of the customer that I'm lending to in determining the price at which we see. So you will then find that customers that are riskier will attract a bigger margin, because there's a base and then there's a margin you apply. That margin will be bigger or lower depending on the risk profile of the customer. What informs that risk profile? It is historical performance. It is both if you have been banking with us or you have any other transactional history with other banks, which then kind of puts the power back to the customer's hands to actually determine the price at which they will borrow from banks. So there is a transmission mechanism and linkage between the risk profile of the customer and the price that they get. And needless to say, usually you would see the riskier the customer, the more risk or the more probability we see them transitioning into stage 2 or stage 3 of the loan book classification.
And I've seen one of the areas that you're very intentional to lending towards is the MSME sector. And it's a sector that traditionally has been perceived as very risky. Are there intentional efforts to de-risk that element, even as you lend to them, understanding the importance that it plays to the overall economy of Kenya?
So, so I like the fact that you use the word intentional, because we are very intentional about the business we do at Stanbic. It's going to be purposeful. It's going to be forward-looking. It's going to be relevant for the future of the country. We try and align our strategy to the winners and the growth vectors of the country. Now, I read a survey that says SMEs and MSMEs will contribute 42% of banks' business and financial services business into the future. So if you're not in that area, you're probably missing something, right? So the way we think about these businesses is to also say that MSMEs today are the SMEs of tomorrow. They are the commercial clients of the day after tomorrow, and they are the corporates of the day after the day after the day after tomorrow. So the way we think about it is, how can we help? And we classify them into three. So there are SMEs, MSMEs, people, individuals with good ideas but no capital whatsoever. For that set, we do grant funding through our Stanbic Foundation. Give you, we evaluate the business you have, we give you free money, right? And you go, and we are in partnership with some international organizations on this. Grow, just, let's incubate the idea into something. And then there's a second category where you've got an idea, you've kind of been in some business, you can't quite yet afford commercial credit, but you're worth some tests. And for those, we do what we call catalytic funding. Again, through the foundation, we're saying we're giving you some money. It's going to cost you 2%, which is really doesn't even compensate for inflation and cost of risk, but it's an administrative fee. But then you've got to pay it back. The difference between the grant and this is, because you have some business, you've got to pay it back so that you can roll it over to someone else. And then the third class is commercially viable SMEs. And those, we have a business unit within the bank that is entirely just focused on that. So that is how we think about SMEs and MSMEs. In these first two classes, for the last 2-3 years, we've actually worked with 1,583 of those SMEs. So, and that starts to build the pipeline of this SME book, starts to build the pipeline for the winners of tomorrow in terms of commercial and corporate plans.
Coming back to the FX risk, it's very sensitive. It's been all over. I know the shilling has sort of appreciated against the dollar in the past few weeks, which seems to be a good thing for Kenyans. But for you, especially just looking at your books, how much of your assets are in dollars? And with this fluctuation in currency, how does that impact you?
So I like to say that markets are sentimental, but they are not emotional. So markets take a view based on what they see, the information they have, and what they expect to happen in the future. But they don't quite care about whether the shilling gets to 100 or 200. It doesn't matter to markets. You will see flows dictated by the sentiment, the expectation, the return that they see. I do feel that the response by the authorities in terms of ensuring the monetary policy instruments transmit to the economy has been responsive, and that is why we see some of the outcomes on this. And we do expect and we do want to see more of that, so that the market actually takes a view and is responsive to that. Now, within the bank, the local currency to foreign currency split is an outcome. You get that based on the choice of customers you bank. If you choose to bank the tea sector, you will end up with dollars because they sell tea to Pakistan and Egypt, and they won't pay you in shillings. So it's almost an outcome of that. That outcome is very deliberate for us. 56% of our balance sheet is in local currency, 44% is in foreign currency. That ratio was 52 to 48% last year. We are working towards moving more and more of our balance sheet towards local currency, but of course without abandoning the fact that we have winners who operate in dollars, and those winners we will continue to bank.
Now, Richard Iperu Omelu has been appointed the Export Processing Zones Authority